Hey everyone, welcome back to Stock Explorers. Today we're diving into something that has the potential to really shake things up in the tech world.
Yeah, these Liberation Day tariffs, they could have some pretty big consequences for a lot of companies, especially those who rely on global supply chains.
Right, and one company that's definitely in the spotlight right now is Micron Technology. They're a major player in the memory and storage market.
Exactly. And with their manufacturing operations spread across the globe, they're particularly exposed to these new tariffs.
I think it's safe to say the markets are already a little jittery about all this. Right after President Trump announced the Liberation Day tariffs on April 2nd, Micron's stock price took a pretty significant hit.
Oh, yeah. I mean, a nearly 15% drop in a single day, closing at $74.34 a share. That's a pretty clear sign that investors are worried.
And we even saw some pretty substantial movement in pre-market trading on April 4th. The stock was already down almost 6% before the official trading day even began. So it's clear that there's a lot of concern about how these tariffs might disrupt Micron's international operations and ultimately their bottom line.
Yeah, when you have a company like Micron that's so reliant on a complex global network of suppliers and manufacturers, any kind of disruption to that network can have a ripple effect throughout the entire operation. And investors are right to be concerned about the potential impact on profitability.
So can we break down these Liberation Day tariffs a little bit? There seems to be more to it than just a simple across-the-board increase, right?
Absolutely. There's kind of a two-tiered system in place. First, you have a universal 10% tariff that's applied to pretty much everything coming into the U.S.
Okay, so that went into effect on April 5th of this year, so already in play.
Right. So that's kind of the baseline impact that pretty much every company importing goods into the U.S. is going to feel. But then on top of that, you have these additional reciprocal tariffs that target specific countries based on their trade surplus with the U.S.
Ah, so this is where things could get really interesting,
Does.
especially for a company like Micron with its extensive global manufacturing footprint.
Precisely. These reciprocal tariffs are set to kick in on April 9th, and they're going to hit some key players in the semiconductor industry pretty hard.
So let's talk numbers. Which countries are we talking about here, and what kind of tariff rates are we looking at?
Well, for starters, China is facing a 34% reciprocal tariff. And here's the catch. That's on top of a pre-existing 20% tariff.
So we're talking a total effective rate of 54% on goods coming in from China.
Exactly. And then you have Taiwan, which is another major hub for semiconductor manufacturing. They're getting hit with a 32% reciprocal tariff.
Wow. Are there others?
Oh, yeah. Vietnam's facing a 46% tariff, Cambodia a whopping 49%, and even the European Union isn't exempt. They're looking at a 20% reciprocal tariff.
Those are some pretty significant numbers, and when you consider just how intertwined the global semiconductor industry is, these tariffs could have some pretty far-reaching consequences.
Oh, absolutely. You've got components and subassemblies crisscrossing borders multiple times during the manufacturing process. So a tariff imposed at one stage can easily cascade through the entire supply chain, driving up costs at every step.
And for Micron specifically, where are their main operational hubs located that make these tariffs so relevant?
Well, they got a couple of really important manufacturing facilities in Taiwan and Singapore. That 32% tariff on Taiwan is particularly significant because that's where a lot of their DRAM manufacturing and testing takes place.
And DRAM is their bread and butter, right? Makes up
Yeah.
the majority of their revenue.
Absolutely. It's about 76% of their business. So any increase in costs there could really eat into their profit margins.
And what about Singapore? What are they doing there?
They've got an advanced packaging facility in Singapore that handles high bandwidth memory, HBM, that's really critical for AI applications.
So, even if Micron isn't directly importing the finished goods into the US, the tariffs on the components they use in places like Taiwan and Singapore can still have a big impact on their overall costs.
Absolutely. It all adds up in the end. And Micron is already facing some pretty stiff competition in the memory market.
Yeah. You've got companies like Samsung and SK Hynix breathing down their necks. So how are they planning to deal with all of this? Have they said anything publicly about their strategy?
They have. And it seems like their main plan is to try and pass along these tariff-related costs to their customers wherever possible.
Which makes sense from a purely financial standpoint, but could that strategy backfire?
It could. I mean, passing on costs like that could make them less competitive, especially in price-sensitive market segments.
Yeah.
And it could also hurt demand if customers start looking for cheaper alternatives.
Have they addressed that concern at all?
They have, actually. They said that while they understand the potential risks, They're prepared to work closely with both their customers and their suppliers to try and find ways to mitigate the impact of these tariffs. They're exploring all sorts of supply chain options, trying to find the most efficient and cost-effective ways to navigate this new landscape.
I guess we'll have to see how that all plays out. But haven't there been some predictions about how much these tariffs could hurt Micron's profitability?
There have. Earlier this year, Micron CEO suggested that tariffs could potentially shave off something like 50 to 100 basis points from their profit margins.
And for those who might not be familiar with the term, a basis point is one hundredth of a percentage point. So we're talking about a potential reduction of 0.5% to 1% in their profit margin.
Right. But keep in mind, those were just preliminary estimates, and they were made before the Liberation Day tariffs were even announced. So the actual impact could end up being significantly higher than that.
Which is a bit concerning, especially considering the intense competition they're already facing. What about their capital spending plans? Are they adjusting those at all in response to this?
Well, as of right now, they're sticking to their guns. They've got roughly $14 billion earmarked for capital expenditures in fiscal year 2025, and they're planning to move forward with those investments, which include some pretty big projects in Idaho, Singapore, and Taiwan.
Interesting. So they're not letting the tariffs deter them from pursuing those long-term growth initiatives?
It seems that way. Of course, they're likely keeping a very close eye on how things develop, and they're probably prepared to make adjustments as needed. But for now, they're full steam ahead.
All right, so we've talked a lot about the potential negative impacts of these tariffs on Micron, but are there any potential upsides here? Could they actually benefit from this situation in any way?
It's not impossible. I mean, one potential advantage is that some of their competitors might get even harder by these tariffs, especially those who rely even more heavily on manufacturing in countries like China, Taiwan, or Vietnam.
So Micron could actually gain some ground competitively if their rivals are forced to raise prices more aggressively or if they experience more significant disruptions to their supply chains.
Exactly. It's all relative, right? It's not just about how much Micron is affected, but how much they're affected compared to everyone else.
Okay, so what about the broader semiconductor industry? How are other major players reacting to these Liberation Day tariffs?
Well, the overall sentiment has definitely been negative. We saw pretty immediate stock declines for companies like NVIDIA and AMD right after the tariffs were announced.
Yeah, and it's not just the chip makers themselves, right? It's the entire ecosystem.
All right. I mean, think about all the companies that rely on those chips, from smartphone manufacturers to automakers. Everyone's going to feel the pinch if the cost of these components goes up.
It's like a domino effect. And some analysts are already sounding the alarm bells about specific companies that are particularly vulnerable in this new environment.
Yeah, analysts at Citi, they've singled out Micron, along with companies like On Semiconductor, Broadcom, and Global Foundries, as being particularly at risk from these tariffs.
Interesting. So what makes these companies more susceptible than others?
It really comes down to the structure of their supply chains. Companies with more geographically concentrated manufacturing operations, especially those heavily reliant on regions like Southeast Asia, are likely to face more significant challenges.
So could we actually see a shift in the semiconductor landscape as a result of these tariffs, with companies potentially reconsidering their global manufacturing strategies?
It's definitely a possibility. We could see a move towards more regionalized or even localized production as companies try to minimize their exposure to tariffs and other trade-related disruptions.
Which would be a pretty significant shift, wouldn't it? I mean, the semiconductor industry has become so globalized over the past few decades.
It would be a major change. But these tariffs could be the catalyst that forces companies to rethink their approach and prioritize more resilient and flexible supply chains.
We've talked a lot about Micron's strategy of passing these tariff costs along to their customers. But how feasible is that in reality? I mean, are customers just going to accept these price increases without pushing back?
Well, it's a trickle situation.
Okay.
On the one hand, Micron does have some leverage right now. The memory market is in a relatively strong position, with demand outpacing supply in many areas. So they might be able to get away with some price increases without losing too much business.
Especially in those high-demand, high-margin segments like the HBM market.
Exactly. When it comes to those cutting-edge memory technologies that are crucial for things like AI and high-performance computing, Micron is a leader, and they might be able to command a premium even with higher prices.
But what about their more commodity-type products, the DRAM and NAND flash memory that goes into everyday electronics? Are customers likely to be as forgiving there?
That's where things get more complicated. In those more competitive segments, price sensitivity is much higher, And Micron is likely to face more resistance if they try to pass along significant cost increases.
So they're kind of walking a tightrope here, trying to balance their need to protect their profit margins with the risk of alienating their customers and losing market share.
That's a good way to put it. And they're also going to have to be very mindful of what their competitors are doing. If Samsung or SK Hynix decide to absorb some of these tariff costs in order to undercut Micron on price, that could put Micron in a very difficult position.
So a lot of moving parts here and a lot of uncertainty. I guess time will tell how this all plays out.
Exactly. This is a rapidly evolving situation, and we're going to have to keep a close eye on it to see how Micron and the rest of the semiconductor industry adapt to these new trade realities.
One final thought for our listeners to ponder. How might this new tariff landscape reshape the global semiconductor industry in the long term? Could we see a shift away from the highly interconnected global supply chains that have dominated the industry for so long?
And what about innovation? Will these tariffs stifle innovation by increasing costs and reducing collaboration across borders? Or could they actually spur innovation as companies seek new ways to overcome these challenges and develop more resilient and efficient supply chains? Lots to think about.
Indeed. If you found this discussion helpful, please remember to subscribe to our channel, give us a like, and turn on notifications so you don't miss any of our future deep dives into the stock market and the forces that shape it.
Thanks for listening.